Back again with another episode of Crypto Astrology. Today we're going to be talking about leveraged tokens and why you should not buy them. Don't forget to like and subscribe. Just kidding, now that we've got that joke out of the way, let's get serious. So you clicked on this video for one of probably two reasons. Is that you want to buy Bitcoin or Ethereum, or you've already bought them and you want to know what's going on with the general market and what do I think about it. So I want to bring your attention to the first thing I want to think about when looking at the market, and that is dollar cost averaging Bitcoin. Now you might be wondering, why is this the first thing you think about? Well, because dollar cost averaging Bitcoin over Bitcoin's 10-year plus life cycle has been proven to basically outperform a lot of other investments. And the main reason why you're looking at this video is because you want to see Bitcoin as an investment or a way to grow your money and become more financially independent, right? So this chart that I'm looking at here is just dollar cost averaging, which is buying over a long period of time to even out the volatility in the market and just try and increase your value over the long term. So this is just over 1 year, buying daily with 10 US dollars, right? So as you can see, the green line is if you just put that in the bank and had no interest. And the yellow line is if you put that money into Bitcoin. And as you can see, generally over the last year, it's been outperforming that. And that's what you want to see. And it's outperforming that by quite a bit, by 75%. And that's a lot better than a lot of other assets. But this is the kind of value that I look at and I'm like, okay, if Bitcoin is sort of counted as the safest investment or coin to buy in the cryptocurrency space, I want to be able to outperform this if I choose to invest in any altcoins or choose to do any trading. And so if I don't think I can beat that, then my best strategy is just to dollar cost average and buy and hold, and I'll get at least 75% over, let's say, a year. And so I'm trying to look for this. I'm looking at this value for the next year as well, and that's sort of my projection. So yes. Moving on. Now we have news. So I've just scoured a whole bunch of news sources. One being CoinDesk, another being CryptoCraft, which sort of lists all the different news places that you can look at. And sort of this week and sort of last couple months as well, there's been talks about regulation from the US government. One being the infrastructure bill that's sort of been passed or being talked about and debated, which basically a lot of that is about a lot of doubt in the market when people bring that up, because there was mentioning of them regulating and requiring miners to have some sort of identification as like brokers. And that's not very good because cryptocurrencies in general want decentralization and anonymity. So the market has generally been positive this week, of course, because Bitcoin's also been rising. And there's also talks about a US approved ETF. And a lot of these places, they do talk about this ETF, and it's all about this ETF being approved, being expected. But if you dig deeper, this ETF is actually based off like Bitcoin investing companies. So stuff like mining equipment and those sorts of things. It doesn't include GBTC because it has too much BTC on its holdings. But generally, these companies will correlate with Bitcoin price in terms of their own price action. If you look at the SEC webpage, this is talking about basically this ETF being Bitcoin Industry Revolution companies, and it explicitly mentions that it's not GBTC, and it has further information about it as well if you want to read about it. All these websites I'll link in the description below as well. There's also some mentioning about Mt. Gox, but I feel like this is just on the side and we can just ignore this because Mt. Gox hasn't really been relevant since the early days. Okay, So let's move on to some of the most interesting long-term charts and quantitative charts that I've been looking at. And one of these is the Bitcoin logarithmic growth curve. So this one here is basically the whole price action chart of Bitcoin that's been fitted, that had a logarithmic curve fitted to it. So basically it's just a curve that's been fitted towards these peaks and these troughs over the last few years. As you can see, it also has this 0-to-1 ratio between the peaks and the troughs that oscillates and sort of gives you an idea of how far away from the peak we really are. And if we zoom in, it basically over these past this past year and this past cycle, right? Because Bitcoin has different cycles, as you can see by this, the topping and the bottoming near the tops and the bottoms of this curve trend, is that we haven't really reached the top yet, but we are sort of hitting the middle line. And the last time we hit the middle line, we actually did have quite a bit of a pullback. So that was around $53,000 where we had the pullback, and we sort of bottomed out about $41.6 thousand. On to the next chart. So this is just the same chart, but it's got a bit of more visual flair. It just sort of tells you where to buy and where to sell. And this chart is sort of based off this logarithmic curve that was made in like 2014, 2015, and it's been sort of accurate actually. According to this chart, we're meant to already be at $100,000 per Bitcoin, so I think this is a bit of an overestimate, but we can sort of look at this in the long-term trend, and it sort of does fit what we expect. Onto the next chart. This is a 1+ year hodl wave. Basically what this means is, this is in blue we have the price action, so the actual price of Bitcoin in US dollars, and the yellow is sort of the amount of people holding Bitcoin for more than 1 year. And so you sort of see them sort of dip out. So the amount of people holding Bitcoin over 1 year, it sort of goes down every time we sort of peak. So we see here and here, and right now we have a downwards curve. But so yeah, if we start seeing upwards curve, well, then definitely the bull market is over. But yeah, generally it's a big downward slope. So we kind of want to look at a bit more of a slope than this. Yeah, this is something to look out for. So we are seeing a downward slope right now, and we did have a little upward slope there, just momentarily. But yeah, I mean, this could sort of suggest that we are topping somewhat soon. Next is the 200-week moving average heat map, and this is basically sort of the price deviation from the 200-week moving average. And as you know, the 200-week moving average by this chart, basically whenever the price action meets that 200-week moving average, that is generally a signal that we won't go any further in terms of price action. We won't go any lower. Next is Bitcoin search results over time. So this is the last 12 months. If we look at the last 5 years, we sort of get an idea of when we have peaks, and generally it's above like 50 on this chart. I don't quite know what that means, but it's basically whenever research results spike for Bitcoin. Next, we have this trading view. Okay, I don't know how this made it in. Just ignore that. So next is the Mrv score, and this has actually proven time and time again that the peaks generally come in around the high red region. Although we did see a peak here and a peak here on the Mrv score, we didn't see anything on the blue price action. I mean, we did see blue price action peak, but the red did not meet in the red band. So that therefore we do not see that as a peak to end the bull cycle. Next is the pi cycle top indicator. So this pi cycle top indicator has been really, really good. It's basically like mathematically like two lines that whenever they meet, whenever the yellow line crosses from underneath to over the green line, that is typically like a top. And this is pretty accurate by 3 days. So it's actually been really, really good, and it's pretty surprising how accurate this is. And the last time we had a signal on this was on the 12th of April, and it actually did get that peak within 3 days, so it's pretty impressive. And what you notice on this chart is that we are getting sort of an upward slope again, and that's generally a good signal, because after we get a lot of peaks, we don't have an upward signal. So I think that we actually are experiencing something like this, where we have a double peak in this cycle, and there's a lot of evidence on the charts that actually suggests this as well. I might go over this in another video, but for now it's just sort of something to look at week by week, and this is really positive, because we actually did bounce off it surprisingly, and it is having an upward slope, so that generally means good things. And if this upward slope continues, we should actually see another top maybe in a year or in 2 years, in 2 years time. So that is very good for any long-term holders. This is another article I found very useful. I might go over this in another video for a long-term analysis. Another 200 week, we already looked at this. This one's a pure multiple. So pretty much anytime we do get a really low region around this region, it generally means it's a bottoming signal. So anything less than 0.5 is considered a really good bottoming signal. We actually did almost get one here, and then it shot right back up. So that's actually a good signal as well. And this is CryptoCraft, the website I mentioned earlier. So if you ever want to look at other news for cryptocurrency, this is pretty much a good way to find it, apart from Reddit and other places. Okay, so this is so this website is called Live Crypto Fear and Greed, and this one is also fear and greed over time. What I've noticed is that whenever the fear and greed on this website hits around like the low 20s, where it's categorized as fear, right? That's generally a good time to buy, and especially when it hits around 15, like the number 15 and like 10 is pretty much the lowest it ever goes. Well, not ever goes, but like it goes for like months at a time, and that's generally like where you would be looking to buy. And then generally this region is where you start to be careful about buying, and where you want to be selling if you're trading. So on this one, this website I found is more accurate. This one, I do give a warning about this, because it doesn't really follow the other one, and it's based on like every 8 hours, and I don't think it's that reliable in terms of the signals that it produces, and sort of so I don't recommend looking at this one, but I recommend looking at this one by alternative.me. And this is more accurate, I've found, and it sort of keeps you having like a level head when all this news about, oh no, Bitcoin's going to zero, Bitcoin's going to $10,000, it's going to crash. It's best to look at this and sort of be like, oh, okay, well, in terms of the range, it's just it's between fear and greed, and whenever you see fear, you sort of want to buy, and whenever you see greed, you sort of want to sell. That's sort of the general sentiment with this. Okay. Alright, let's look at the charts now. So here's basically just the price action, just the general price action of Bitcoin right now. We are at $54,694 US, and we always look at US dollars because everyone else in the world uses US dollars, and that's pretty much. And it's psychological, because whenever we hit like round numbers, it tends to be very, very significant. As you can see, we sort of bottomed at the $40,000 level here, and that was like I think a week ago. Yeah, a week ago we bottomed around here, and look at it now. So it's actually very important to look at those levels. This is one of my charts that I like to look out for long-term analysis. This has a variety of different indicators right here. The main indicator here is the cycles. I mean the logarithmic curve, like I mentioned before. And as you can see, we're sort of getting some resistance at the midline, the midpoint. So this is a normal price action, this is a log price action. So we are getting some resistance on the midline, but we did bounce off this bull market support band, so that was very, very good. Okay, for the next, yes. Yeah. For the next chart, I also want you to look at this one. So this one is, oh, sorry, I'm looking at Ethereum. So this one is, it does say sell there, but to be fair, it does look like a shooting star candlestick, which is a pattern. Basically, that means that we're going to go lower from there. So this might be an area of caution. When I look at this, I see, well, it did tell you to sell there as well, and sell there as well. What signal is this? This is a Stochastic Rsi. It's been pretty good. It's been decent, not the best. Yeah, it's been okay. It's been an okay signal. It's like half. So I don't really know how reliable this one is. But this signal is very reliable. This is the candle close strategy. And if you backtest this, it actually does outperform buying and holding. So this is a very good signal. Okay, let's move on. Yeah, so when I look at this, I want to draw your attention to the Mfi signal here. So this Mfi signal has been really good for detecting bottoms on the daily time frame. So anything below sort of 22 or 25 region, if you see like a little peak like this, it's generally a good signal that we bottomed for a good while. So the last time we bottomed was here, and that was on the 20th of September, and before that was on the 20th of July. So that was a good 2 months before the next bottoming signal, and then we did go higher than that. Previous before that was this one on the 22nd of May. So difference between May and July, that's at least a good month. So at least a good month is a bottoming signal. And as you can see, it went up from there and then did retrace to near that region. So that is generally a good signal, good signal for a bottom. So whenever we see that, that's what we want to buy. I found the Mfi is pretty good for signals of bottoming, and not so much for topping signals, but this one did work out pretty well. So whenever we are pretty overextended in this Mfi, so I do expect some sort of pullback soon, and that sort of coincides with this this moon analysis, which basically when we have a new moon, it's bad for price action. It's likely to go down. Well, it's actually to go peak at the new moon and then come down, like we did here. We started rising towards the new moon and then we came down, and the full moon is when we drop towards the full moon and then rise after the full moon, is what we saw here. So we are expecting some sort of either consolidation or downwards movement, especially paired with this Mfi signal. It's generally a pretty good signal that probably that was the highest that we have in that region for about a week. So if you can see, the peaks sort of correlate with the moons. So if you want to if you do want to trade by the moons, which I think is actually a pretty good idea, because they've sort of been 90% accurate this whole year, and not exactly on time, but sometimes a little bit, maybe a week later. They've been really good. Next and final thing I want you to have a look at is this RSI analysis. So I might go in depth with this further, but basically, as you can see by these yellow and red boxes, whenever we sort of hit this bottom line of support and top line of resistance, we sort of do see sort of bounces between these regions. And as you can see, like whenever we hit the top line, we sort of get bounced away from it, and then whenever we hit the bottom line, we sort of bounce up from it. And that's been really good. And same with this one as well. I just haven't been bothered to draw the boxes. This is on the 4-hour time frame, by the way. And so we just noticed that we did break through this sort of channel right here where we had some support, and that generally does not mean a good thing. So I sort of do expect Bitcoin to sort of come back down, maybe 53 or maybe even 50, and it'd still be okay. I still think you'd want to buy if it came down there. Maybe it'd be a good buying opportunity as well. Okay, well, I think that's all the time we have for this week. It's sort of been pretty long, 20 minutes, but thanks for watching, and I'll see you next time.